And look, this is a massive, concerted, intentional effort, right? And people say, oh, no, it's just coincidences. No, they're not coincidences. It's not a coincidence that we're getting these announcements now with the big, BTC, I mean, not BTC, the big fintech. TradFi is the word I'm searching for, Austin. Sorry. Big TradFi companies saying, oh, yeah, we want to do this. BlackRock, we want to do an ETF for crypto or for Bitcoin. Really? I mean, think about this. Not a month ago. I mean, it's not even like a year ago or 2 years ago or 5 years ago. Not a month ago. The SEC was like, you're a villain if you're even touching this space. You're bad. Now, everybody. I mean, Deutsche Bank this morning and Fidelity over the weekend and BlackRock last week. And, everybody's jumping in the pool. Now, why? Why is that?
Bitcoin challenged $31,000 again after the June 27 Wall Street Open as traders hope for upside continuation. The start of United States trading saw fresh positive news as asset manager Fidelity Investments reportedly prepared a filing to launch its Bitcoin spot-based exchange-traded fund ETF. First, it happened slowly, then all at once, financial commentator TED Talks Macro wrote in part of a reaction, referring to existing ETF plans from the largest global asset manager BlackRock and others. Despite not yet repeating the rapid gains seen last week, BTC/USD preserved the majority of its progress, with commentators hopeful that bulls would come through. Bitcoin refuses to dip back below $30,000, popular trader Gel summarized on the day. Looks like this will be one of those times where consolidation below resistance is bullish. Flip $30, $32,000, and all bets are off. Hello and welcome to Money Talks. In today's video, Mark Yusko shares his view on the future of Bitcoin and the reason why BlackRock want to launch Bitcoin ETF at this time. Is it all planned or not? So without further ado, let's get started with the video.
I used to laugh. You hear people like Ms. Warren and others say, crypto is only used for money laundering and terrorism. I was like, right. The biggest terrorism tool in the world is the US dollar. Full stop, right? It's not close. But what I didn't realize was they had inside information. They were actually doing the money laundering with crypto through FTX. So there's a whole bunch of stuff there that, we don't even have to dive into, that bad stuff, bad people doing bad stuff. I have a really bad feeling that some stuff's coming. And they've been systematically attacking the highest levels of success. And I think they're about to go down into the DeFi space. And look, if you can literally change the rules after the game starts, that's a tough environment for founders and entrepreneurs and investors to win, right? I mean, literally, if you dribbled across half court in a basketball game and they said, we changed the rules. You can't cross half court anymore.
FTX has filed a lawsuit against a former regulatory and compliance executive at the exchange, alleging he made a series of payments attempting to prevent staff from blowing the whistle about the exchange's issues. On June 27, FTX filed a lawsuit against Daniel Freiberg, who held multiple roles including Chief Regulatory Officer at FTX, Chief Compliance Officer of FTX US, and General Counsel at Alameda Research. FTX claims Freiberg was a fixer for the exchange's co-founder Sam Bankman-Fried, whose father urged for Freiberg to be given a major role as per the complaint. Joe Bankman, Bankman-Fried's father, urged Bankman-Fried and others to give Freiberg a central role and to keep Freiberg in the loop, so we have one person on top of everything. According to the suit, Freiberg's 22-month stint at the exchange saw him given a $300,000 salary, a signing bonus of $1.4 million, a separate $3 million cash bonus, and 8% equity in FTX US and crypto worth tens of millions. all of which FTX is seeking to claw back.
I do feel like it is a huge deal, and I think it sets the stage for a pretty meaningful bull market, which, look, I declared crypto summer started on June 15th, and I said that months ago, and it's funny, because, well, why? I'm like, well, it's just the seasonality of how it works. It's a 4-year cycle, and you break it into 4 pieces, and June 15th was when we went from from winter to spring a year ago. And so June 15th was going to be the equinox this year. Now, I had no idea that was going to be the day of the BlackRock announcement. And it's literally the bottom. Like, it's been up only since last Wednesday or Thursday, whatever day that was. That's weird, right? I mean, that's an odd thing. But it's fully expected when big institutions, big organizations, wealthy investors have been doing this for years. I tweeted this out earlier today. It's the oldest trick in the book, right? If you want to buy a lot of something, what do? You shit on it, right? When George Soros wanted to corner the market in copper, right? What did he do? He didn't go out and buy a bunch of copper. He went out and sold a bunch of copper and spread rumors that copper was going to zero. Then you swoop in and buy a whole bunch after the price collapses. And big institutions been doing that. Elon does that all the time on all kinds of stuff. That's how big operators operate.
Even the most stalwart crypto supporters could see why the Securities and Exchange Commission might target the crypto industry for some enforcement. Events of the past year, from the failure of Three Arrows Capital to the fraud FTX, were bound to bring some scrutiny, and the industry has always been too hospitable to blatant hucksters. But the recent spate of enforcement actions by the SEC and U.S. agencies do not meet the standard of protection. Instead, a close review of everything from the banking crackdown earlier this year to the endless regulation by enforcement strikes a different chord. It seems as if the U.S. government is taking action to protect the financial services industry from disruption. Exhibit A of this phenomenon is the SEC's mammoth suit against Coinbase, a company long perceived to be one of the good guys in crypto. Its client list includes large asset managers, Fortune 100 companies, and the U.S. government itself, none of which have ever complained about the integrity of its services. Unlike FTX, Coinbase has never defrauded its customers. It didn't base itself in an offshore tax haven and has never been hacked. In fact, the company has repeatedly stated its intent to be regulated and has gone as far as suing the SEC to force it to provide a roadmap on how. Its reward? A 100-page suit is full of contradictions, like some Layer 1 tokens being secured. Imagine a town that refuses to tell you what the speed limit is but frequently gives speeding tickets. Nobody would take such a place seriously. We still don't know whether Ether is security, despite SEC Chair Gary Gensler telling us repeatedly that his agency has all the authority it needs to make that call. New technologies often clash with old rules, and regulatory agencies can initially struggle to understand startups because they don't understand the tech. Gensler doesn't have that excuse. He was a visiting instructor at MIT's Digital Currency Initiative and taught a generally respected class on blockchain. How then did he go from that level of knowledge and belief to arguing on CNBC that we don't need crypto?
And that's the same thing. So Alameda was this big trading firm. No, they weren't. Look at the data. They were not big. They were not sophisticated. They were not good. They lost their ass in Luna, which precipitated this whole thing. So I think it was part of the whole, wrapping it all back to choke point. I think it was all part of the kabuki theater to make people afraid, just like the Silicon Valley bank run was part of the kabuki theater to make people afraid of banks. Why would you want to make people afraid of banks? Well, because they're going to give you a solution coming up pretty soon called the CBDC. And if people think that's a solution, you're just not paying attention, right? You should be very, very, very afraid of CBDCs.
So what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.